Gibson. Hi, John. Can you see me?
Hi, Debbie. Yep, I can.
I love your nice, vibrant shirt. I don't know. I'm just complimenting everybody. You guys look great, which because I'm sure you spend like 2 extra minutes to deck up and then just come right in front of the camera. So thank you for your time.
Absolutely.
For the fact, so John is a VP of product for realtor.com. He's based out of Santa Cruz, beautiful Santa Cruz, I must say. However, we do understand, John, that you took that extra effort and to, give us your time in spite of you and your family going through a little bit of crisis. I hope everybody's safe and sound.
We're all safe.
Okay, good. And I promise maybe next year, you never know, we might just do this in person at the boardwalk, by the boardwalk.
I'd love that.
Yeah, I hope everything goes fine. So thank you once again. I do know, John, you want to show some slides and then I have a bunch of questions for you. So go for it, John.
Yeah, absolutely. So thank you for having me. I really appreciate the opportunity to talk with everyone. Got a lot to cover today in a little bit of time. We're going to go over some basically high-level U.S. real estate trends that I can share, give some numbers to kind of what people are seeing. Then we'll talk a little bit about some of the home buyer preferences that we've noticed on the realtor.com side, both from surveys as well as our search behavior. And then I'll kind of wrap it up with some data and insights that we're seeing on the digital real estate side to kind of complement what we're seeing macro. And then we'll leave some time at the end for questions. So first, to set some context, I want to show this chart showing the existing home sales. There's a lot here. Let's notice at the far right, we see that in February of 2020, we actually hit a 13-year peak in home sales. And then a month and a half later, we saw this precipitous decline through the pandemic. Let's look back 13 years to 2007, right before the Great Recession. You see that we had a similar peak and decline stretched out over a year and a half or so. We did that all in 2.5 months or month and a half. So pretty wild times. I know everyone has experienced that. It's crazy in so many different ways, but this is what it looks like. The good news is we're bouncing back on the home sales. Okay, let's give a little more insight into the components of the housing market and how that changed through the pandemic. This chart or the slide has a few different charts here. We're going to look at median list price, active listings, time on market, and new listings. The chart shows a yearly trend based upon where we were in January, and each line represents a year. Let's pay attention to the red because that's 2020, and really we're just going to see how different it is. First, in terms of list prices, you can see that there was a pause kind of on listing prices as the pandemic kind of got going, but we've seen really strong price increases kind of shooting up as we've seen that recovery happen. This is kind of pushed by kind of the pent up demand that people have felt sitting in their home. A lot of low mortgage rates, as a lot of people that are on the conference are well aware. Very limited supply. Speaking of supply, the number of active listings wasn't really high to begin with, even before the pandemic. But you can see as the pandemic has gone on, we really have a shortage of inventory, and that scarcity of supply is actually helping push prices up. Next, let's look at time on market. This is kind of talking about the pace of sales, how active the market is. It was looking pretty standard at the beginning of the year compared to prior years. But as the pandemic and the lockdowns hit, people kind of were unsure, kind of nervous. We saw homes sitting on the market with the time on market extending. It wasn't until kind of the end of May where we saw more activity pick up and that time on market has declined. Finally, to kind of get more listings, and see our inventory increase, we have to look at the new listings. And again, we see that pause, that cautiousness in March and April as the pandemic started, starting to get back on track into August. So those are kind of some of the components that I think give a little more detail into what's been going on in the US housing market through the pandemic. The realtor.com economics team has actually made what's called they're calling the market recovery index, which is a single metric that kind of characterizes the recovery. It's based upon the 50 largest markets in the US, and compares 4 different dimensions shown up here on the right compared to where we were seeing in January before the pandemic. So you can track where we were in January, some strength in the market, pandemic hits, and we see this dip. The good news is as we pull out of it, we actually came back to parity in mid-July. So the index currently is at 105.6. So that's a good sign, and it's nice to see that it crossed that line of parity. We were all kind of a little nervous as we were down here, and nice to see it up above. To go into a little more depth, this chart, there's a lot of lines. I'm not going to ask you to check out each of these, but what this does is decompose that index into the 4 pieces around the the growth, prices, etc. And what I want to do is really show where and when each of those components crossed the line and transitioned into that positive territory. What we see is demand came first. Makes sense. In early May, the demand and growth kind of crossed that 100 point mark. This was followed by price growth. Demand's high, then follows prices. Makes sense. So we get more buyers back into the market. Then eventually we start having transactions in the pace of sales. We saw that cover in July. And then the last piece, again, I think it's logical, is it new listings now that demand is up there, sales are starting to happen, new listings are coming and they're back pretty much on pace as of this month in August. So I wouldn't call it normal. I don't think anything's really normal right now, but within the context of the broader pandemic ecosystem, I think we have some normalcy in the market. One thing to add, not all regions were the same. So this is that same index, but broken out by geography. You can see that the West and the Northeast kind of led the pack where they kind of got back a little earlier. The South and the Midwest trailing a bit, but they're all almost there. The Midwest at 99.1. This is as of a couple weeks ago is when this data was shown. Okay, so I've given a description of the overall market. Hopefully that was useful to get some of the details. But that market's really driven by the consumers, the home buyers and what their preferences are. So now I'm going to spend some time talking about how their attitudes have changed a little bit through the pandemic. First of all, we're all remote. We're probably working from our home. That's been kind of a defining factor of people's lives right now. What we've seen is actually 52% of home buyers actually prefer working from home, which is an interesting insight. I'm kind of on the fence myself, but maybe more importantly, 63% of workplaces expect to support work from home or location flexibility post-COVID. So it's not what they're doing now, it's that in the future, they expect to have workplace flexibility. And this is really important because when a family does the calculus of where they're going to live, kind of what's their commute radius, what are they want to be close to, it changes that math a bit. Now, with that location flexibility, more consumers are willing to trade a longer commute for larger homes and more amenities in the home. Going into some of those details, we'll show some of the changes in the pandemic about what people like. I won't go through it too detailed, but really they like things about the house. They're spending more times in the house. Attributes of the search that are lower, these are things like walkability and short commute time. Those are less important in the home searching criteria. Okay, now let's go into the search data that we have on realtor.com to describe where people are looking. No surprise, people are moving out of urban centers and to suburban areas. They're trading that short commute, the nightlife, the restaurants, things that you can't really do as easily, depending on where you live, as you could in the past. Trading that in for the suburbs. The way we characterize this at realtor.com is looking at the home shopping interest in 2 ways. One, across market searches, which means I'm going to mute Gary. There he is. Okay. So cross market searches. This is when people are looking at moving out of a metropolitan area from a large pricing market, like from San Francisco out to Tempe, Arizona, or Nevada. We also see movement within markets. So from, say, downtown San Francisco to places like Pleasanton or Redwood City, out into the suburbs within a market. Looking at specific data in the New York metropolitan area, you can see prior to or post-COVID, searches within Manhattan and the Bronx have actually declined, but we're seeing an increase in home searches in Long Island, the Jersey Shore, kind of New Jersey and Southern New York in general. So we see that trend stack up overall. All right. So describe some of the macroeconomic housing trends, describe some of the changes in the preferences of home buyers. Now I want to talk about what we're seeing on realtor.com in some of their behaviors. First of all, we're getting a lot of traffic. People are spending a lot of time and a lot of visits on search portals. This chart here shows our quarterly, we're on a fiscal year, but our quarterly performance, you can see strong growth. But what's really impressive is in July, we set an all-time record with 91 million visitors, 22% year-over-year growth. It's just pretty remarkable. Our single day record was actually on June 25th with 7 million unique visitors in a day. So we're just seeing a lot of attention and people coming to realtor.com to search for a home and to participate in that online real estate process. Into the details, we've seen what they're doing and some of the attributes of that search change a little bit as well. I want to talk a little bit about virtual tours and 3D tours. I think this may be obviously, but it's become more valuable than ever. But it's not new, right? We've had this technology for a while. It's been super exciting to see things from 3D tours from Matterport or Astroom, things like that. But now we're seeing an increase in listings with these types of deep assets. In fact, a 26% increase compared to before the pandemic. And maybe not surprisingly, they actually get more engagement as well. So if we have 30% of listings with a virtual tour, they actually contribute to about 48% of user engagement. So a strong signal there. We've done a few things new on the site. We've actually opened up this idea of the Livestream open house. So now agents are able to give open houses remotely with a live tour rather than having people come into the house. You can't do that now. It's not the same. We're actually seeing a big uptick there, 300% since April. It's still a small percentage of total open houses in the US, but pretty fast acceleration. What's interesting to me is this opens up different use cases that will be useful even without a pandemic. You're searching for a cross-country move and you're in Cincinnati and want to look at a open house in Atlanta. Well, we can do that now with this technology. Okay. What I'll end with, this is data from the NAR, which shows how home buyers participate in their home search. So we see that 93% of home buyers search online for their home. Kind of makes sense. Below that, about 52% of home buyers, so people actually bought a home, found their home online. That means that there's another 48% are finding it through other ways. They're walking around the neighborhood, their agent is taking them to places. Then at the low end, about 12% of recent home buyers found their agent online. By far the biggest way to find an agent is referral. These numbers haven't really changed much from year to year. This is from the 2019 NAR profile of buyers and sellers, but the data has been similar for a few years now. Post-pandemic, when some of these things like going around in a car with your agent probably won't happen right now. Yeah. I'm interested to see how this is going to change. My hunch is that we're going to see these numbers here shift up in the next survey. And then the bigger question is, will they stay? Will that be persistent as we kind of move more and more online? With that, I'm pretty much done with my presentation. I did want to give a shout out and a thanks to the realtor.com economics team. They have a lot of resources online that anyone's able to, welcome to go check out. I have the links here. And they did a lot of the analysis and data and slides at the beginning. So thank you for that. And thank you for the time. I'll take some questions, John, if you have any.
I do have one quick question because we want to make sure everybody is, we are following be mindful of the time. So you mentioned, I personally like the 3D virtual tour slide. And the first question that comes to my mind is, why now? Why didn't we think of the 3D virtual tours pre-pandemic?
Yeah, it's a good question. And they were there before the pandemic, but the penetration was really low. And it's interesting because when we do surveys of consumers, better photos, 3D tours, those rank really high at what they want in an online search experience. But I think the challenge is that it's a lot of work for agents to buy the equipment, to do the tours, to get them uploaded. So the pandemic, I think, has made that effort, the return on that more valuable. It becomes crucial. I think it's becoming almost table stakes for a listing.
That makes sense. Well, thank you so much, John. It's a pleasure having you in this.
Absolutely.
And I look forward to having you next and next and next again. So be safe, and my regards to you and your family.